All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear, all ready to go, please drop me a 1 in the chat so we can get this session started. All right. Okay. See all the ones coming in. Appreciate it. So let's jump over and take a look, right? So Tuesday, June 13th, man, this year is moving very fast. We had the claimant count come out for the UK, came in better than expected, right? So we took at the UK claimant count. And for those of you who may be new and don't know, sometimes everybody has really the same cycle of reports. Sometimes they call it different. So for your claimant count change, it's the first indication of the employment situation, released a month earlier than the unemployment rate. So although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health because consumer spending, very important, is highly correlated with labor market conditions. Unemployment is also a major consideration for those steering the country's monetary policy, i.e., the Bank of England, right? So came in better than expected. That was positive for the pound. We'll take a look at that. Average hourly earnings came in. Earnings index came in higher as well, right? So we'll take a look at that. Is a leading indicator of consumer inflation. When businesses pay more for labor, the higher costs are usually passed on to the consumer, right? So when we put our trader hats on, right, that came in high. We know that the inflation is kind of sticky in the UK. So when we start thinking in terms of interest rates, looking at this as a data set, we start to think that, hey, UK will probably continue to raise rates, right? Isn't that interesting, right? So there's one side when you're the wage earner and you're like, oh, I'm making more money, but then that can lead to, that doesn't help when it comes to inflation being as high as it is, right? So it's just the ebbs and flows of the market, okay? So average hourly earnings index rate came through, its forecast 6.1 came through at 6.5. Unemployment rate came in at 3.8%, right? On a forecast of 4%. So good. Employment data, right? For the UK, we got the United States CPI came in 0.1% month over month. Forecast is 0.2. 4.1 was the forecast for the CPI year over year. Came in at 4%, just a tick lower. And the core CPI came in right on forecast at 4.4%. So when we click over and look at trading economics to get more of the details, we can see annual inflation rate in the United States declined by 4% in May, the lowest since March 2021, and compared to market expectations of 4.1%, giving room for the Fed to pause rate hikes. The new figure is less than half of June's 9.1% peak, driven by a decline in energy prices and a slowdown in food inflation. Also, the core rate fell to 5.3%, the lowest since November of 2020. Right? So coming down. So we'll see if the Feds are going to pause rates. That's where I don't think they're going to shock the market tomorrow. I don't think they want to do that, but hey, who am I? We'll see if they pause those rates and remain data dependent tomorrow. And then of course it's all about the rate statement. What is Chairman Powell going to say about things moving forward? All right. So we see that Wall Street ends higher after CPI report. That makes sense to us, right? That we saw a rally, which oftentimes happen, right? Lower CPI, saw the rally. UK jobless rates, right? We saw that. We see the DXY falls after the CPI report. So speaking of the DXY, we'll take a look at it. And we can see that it's continuing to move to the downside. So we're in the third week now of decline. So obviously that's neutral to bearish. And we'll see how that news comes out tomorrow. So technically, that crown is still intact. We'll see how it continues to flow. But that 12,722 level of support, it's been pretty strong, right? Way back when we even had a break below it twice. We broke below this level and we settled and came right back above it. So we'll see. We'll see what happens coming in on the daily, right? We put that up fib on it. It's just bouncing around still at that level, okay? Still sitting at that level. So we'll see what happens tomorrow if we continue to get further declines on the US dollar as a result of the interest rate decision and the statement that come afterwards. Any questions regarding any of the fundamentals that we just covered?
No.
All right. So I hope you all are you all starting to kind of see how it all goes together? Yes, no, maybe?
Yes.
Yes, right? It's important. Right, especially for when you're swing trading, right? It can help you with your overall directional bias. So that's good. I see the feedback coming through. All right. See here. All right. So that's that on the fundamentals in the DXY. So we know tomorrow, let me click back to my Forex factory, all right, to the calendar. Everything, right? We've got core PPI coming through tomorrow. So CPI, that's your consumer. And then this is about your producers, right? It's a leading, it all flows together, right? It's a leading indicator of consumer inflation. When producers charge more for goods and services, the higher cost is usually passed on to the consumer. See, none of it's rocket science, right? But it all matters. It all matters. So we've got producer inflation coming through tomorrow, so we'll see where that comes out. And then we have, right on point, CPI today, PPI tomorrow morning. And then we've got the decisions. We also have economic projections reports coming out tomorrow, right? So that's not something that happens every time, okay? So the report includes the FOMC's projection for inflation and economic growth over the next 2 years. And more importantly, a breakdown of individual FOMC members' interest rate forecasts. So it's the primary tool the Fed uses to communicate their economic and monetary projections to investors. All right, that's you, okay? So that's going on tomorrow. So that's going to be important, big day tomorrow. Then we've got the statement and we've got the federal funds rate. So the forecast is to stay at 5.25. And then of course the press conference at 2:30, okay? And then we've got GDP Q over Q for New Zealand, and we got Aussie employment data. So, and then we got industrial production coming out of China. It's going to be pretty important, right? As it relates to some of the currencies that we trade, like the Aussie and New Zealand dollar. It's going to be interesting to see where that comes in, since the economy in China has been kind of fits and starts, right? Ever since coming out of the pandemic, and everybody's waiting for that Chinese economy to take off again, right? But it's stuttering a little bit. So that's going to be pretty interesting tomorrow night. I'll be watching to see if any of the currencies that we trade react to that report coming out of China. So big day, lots of news. I mean, throughout the rest of the week, actually, right? Coming through. So that's that for now. Ryan, good evening, sir. How are you?
My brother, good evening, man. I'm doing well. How about yourself?
Doing great. Doing great. Softball game got rained out.
Yeah,
So,
I was gonna ask you that.
I don't know. So I get to see the little one play, but it's all good. I'm pretty sure they'll make that up during the dog days of August at some point.
Yep. Yep.
Double and
Swimmer
triple
got
header. I
canceled
remember
too,
those
so.
days. Oh, it did? Oh,
Yeah.
man. All right. So caught a little break there, but hey, it is what it is. So anything on the fundamental front that you've
No, man,
caught on to?
nothing that I've seen so far. Looking
Yeah.
forward to tomorrow and seeing what it holds.
Yeah, me too. The Bears keep calling for this recession. I don't know with some of this data that I'm seeing, employment numbers, jobs numbers. I don't know. I know the Eurozone, right, is they're talking about recession, right? I guess did they say they are in one? I
Yeah,
can't
they're
remember. I have to read that
technically
again.
in one. They're
Technically, so that's two
technically in one.
consecutive quarters, right, of negative GDP growth.
Yeah.
Okay. Okay. Yeah. Yeah.
So
But here in the US, I don't know.
I think it'll be interesting, man, because the housing market continues to rally too, and that kind
You
of
know?
plays into it, into the inflation number. So it'll be interesting to see how things play out. The numbers came in, below today or at for the core, but it'll be interesting to see what happens if the Fed does pause. Do we then have the same situation as Australia and Canada, where they got to go back and raise again? And what does that then cause 2-3 months down the line?
Yeah, I know, right? Yeah. Yeah. I like that. I like the way you're thinking that, man. That's true. That's true. They all tend to follow each other one way or the other, seems like.
Yeah.
Yeah. So we'll see. We shall see. It's been an interesting year for its first 5 months or so. So look forward to the second half. If we avoid a recession here in the States, it's an amazing job, I would say. All the way around, we can avoid that.
I was listening to a podcast, and the guy was talking about studies that have been done to look at, on average, how long it takes for the economy to feel the impacts of interest rate increases. And he was saying the duration is between 12 and 18 months to feel the impacts of the interest rate hikes. So technically right now, we're seeing the effects of the interest rate hikes from last year.
Correct.
So with that being said, to this conversation, what will next year look like, right? Maybe we avoid it this year, but next year, do we see something even potentially worse because of that lag in that impact being felt? And then if the Fed does have to come back and raise again, and maybe 2 times, what does that look like in 12 months?
Great questions, man. I think we're making new history considering all the circumstances that happened before that led to them having to hike rates, things like they did. All of the catastrophic events that were going on. So I think this is going to be a huge footprint that after these next couple of years pass, that they'll look to throughout history. How they look back, back in 70, 70 whatever, like 72 and so, like, I think this is one of those periods where, because of everything that happened, since 2020. So yeah, because I think they're still trying to figure it out. You never got hit with so many different things all at once like this,
Nobody knows what's happening.
No. They don't. But I know what's happening. I know these 80-20s is happening. That's about all I know. I don't know much.
They playing, dog.
I tell you what. I know that's one thing for sure that I can hang my hat on oftentimes. So I'm gonna keep following that. So while they figure the rest out. Let's start out. Take a look at the Aussie CAD, right? So we were talking about how it was coming into this key resistance over the weekend with the cloud. They were support at 900 even. Seeing if we can get some type of reaction. We're definitely overbought. We're up there, right? But we know that can stick for a while. So looking for that U-turn. I am right now, I do have a small short on it off the level. So we'll see. We'll see what happens on the 4. I plugged the trade in on that. I didn't wait for wasn't looking for any confirmation. I was just playing the zone. So right around that 61.8. The initial drop off is there, but we're kind of holding above that 900 level right now. So we'll see. We'll see if we can get that level to break and continue short and break that trend line eventually. Then I'll look to add to the position if I can get it. But we'll see what happens there. So we got that. It came up into that 118 zone. right around that 61.8 off this 4. And then we got a reaction, which is what we like to see. So we'll continue to see how that plays out. This is what it looks like on the 1. Okay, so that's clean right there, right in that 80-20 zone, and we got the trend line break. But we'll see. We'll see if we can get it to continue to turn over, or if it wants to push higher to retest that to test this 90-92 level. So that one will be interesting to continue to watch. But I did get short at the level, so we'll see what's going on with that. With this Aussie CAD trade, I feel like that could go either way right now. But we'll see how it plays out. Any questions on the Aussie CAD?
No.
All right. Aussie Swiss. See, now these Aussies are funny, right? Because we've got your commodities tend to give you a rally, give you some pop. If Wall Street rallies, we got the surprise interest rate hike. But with the Australian dollar, they got right here. This is what's got me concerned about Australia. And that's why I'm going to be watching that number out of China, right? Because the country's economy grew 0.2% in the first quarter, the slowest rate of expansion in 6 quarters, and missing forecast for 0.3% growth as household consumption weakens, right? So I know where we are with the interest rates and everything, but that's concerning long term with the Australian dollar. So this is what we look like on the week. Now, if we close out this week bullish, right, you're gonna have a new swing low, and that is a morning star. So that's why I said that, hey, I got that small position in, but it could go either way, right? Especially with that CAD, we have to watch that oil. Because this may correct and then continue to push higher. I don't know, but I'm taking a profit right now. It's doing okay, so we'll see what happens with that. So that one, playing with a little bit of caution, but that's my main concern with the Australian dollar right now. We'll take a look at this Aussie Swissy. You can see how it's bouncing around, right? So this one is bouncing around. We got that push up. We drew it as such for it to move up to the level, and it did. So it's in our 80-20 zone technically. So we'll continue to watch to see how this Aussie Swiss plays out if we can get that correction, right? So you can see here where we made this U-turn, okay? So it's definitely moving bullish, everybody. Make no doubt about it. That 80-20 is just a correction play to the counter trend, okay? So when we're going over to this weekend, we've marked out the zone, Saturday weekly ritual, and you can see how it's trying to push it right back up into that level. So the question is, do we get this correction, right, prior to that, right? Do we get price to move down, and then it could continue bullish all at once, right? This is the play that I'm concerned about right now, is seeing if we can get a correction. Because I'm not buying from there. I would prefer to buy from down here from the trend. So either way, at least based on my rules, I would like to see it down. So we'll see if we'll get it to move down before it hits that D extension. That's the game. Play it over and over and over again. Any questions on the Aussie Swiss?
No.
All right. Let's take a look at this Aussie yen, right? We got a Wall Street rally. Those of you that have been around for a while now, you know a lot of times when that happens, the yen gets ran on. It's weak anyway, right? But it's coming into some key technical zones for us, right? So we do have some technical 80-20s lining up, but I'm always cautious with these yen. These I do look for a little extra confirmation on, especially when you get Wall Street rallying the way it is. So here's that 95.69 level from the weekly. You see that's just beautiful, right? Beautiful price action moving along. Everything's been beating up the yen. But when you come down into the daily, we got a little traffic with these daily levels here, okay? So that leads to the possibility of a potential correction, right? But I want to see a trend line. So then limit on this one. Want to see if I can get a break below, right? Preferably back below that 94.14 level, right? Catch a pullback and a continuation down. But this is another one that's technically in our zone for the 80-20, right? It's just represent a potential area where price is overextended, right? Price is overextended. So we're looking for potential corrections, right? It seems like that's the phase that these Aussie pairs are in right now, is a potential correction phase. But we'll see with this Aussie. And we all know that it has a habit of running and running and running, and then the bottom falls out of it. So just continue to be cautious with the position. Of course, if you're limited in, you're trading small, you manage your risk already, so no worries, right? No worries. It is what it is. But this is where it sits here, looking at the 1 hour. So it's kind of just riding that trend line. We'll see if we can get a break. All right. That's where we are on the ISN right now. So if you're buying, you want to see it pull back a little bit anyway. Okay. Especially even if you were a trader that love to trade off bounces off trend lines, right? This is clean. This is man, right? So you at least want to see it pull back. You want to see it pull back into support into the support zone, into this trend line, right? Okay. If you think it's going to continue long, you're not worrying about 80-20s, anything like that. You're just playing a structure game, right? You want to see it pull into this level here. Okay. And then move back long for you. That's what you want. Okay. Just textbook price action. All right. So that's the Aussie yen. I would love to see that move to the downside and let that 80-20 play out. That could be a big play. That's that. Aussie yen. You all see these are kind of lining up. They're all pretty similar. All right. So I mean the Aussie NZD. This is my 4, and it's just ranging, right? It's trying to. This is a 4-hour level. Okay. That I believe, if I'm not mistaken, Reese called that out. I believe it was. I think it was over the weekend. But it's respecting that level there, right? That low. See if we can get a break below it. But it's sitting right in the zone. It's sitting right in the zone. Okay, 80-20 zone. So if we can get that move down, right? It's not a big time mover, but okay. 75 pips or so. Right, to that TP1 from where it is now, the overall move you see here is 118. So depending on where you enter. All right, so that's the Aussie NZD. Any questions on that move?
No.
All right, just a game of patience, everybody. Just a game of patience, right? I don't myself, right? I can only speak for myself, but I don't look to buy here. Right? I want to buy it. I want to see price go here. This was a big mover off this 236. It wasn't a double bottom or anything like that, right? The 236, it just took off. Those are setups that I'm willing to pass on, right? You have to have filters. That's what your trade plan is for, okay? So, nope, that took off. Congratulations. Bulls won, hit the D extension, continue. It's not my play. I would have needed to come here, test 107.36 to get long with the trend, okay? So you have to be willing to sit on your hands, right? You're not gonna get all of them, okay? Not gonna get all of them. So that's the Aussie NZD. Take a look at this this Aussie dollar. See where we are for tomorrow. Look at that. That's pushing pretty high. Look at that. Okay. Look at those levels. Okay. At these levels. So here we are. It's playing around. Okay, gotta adjust that now. Made a higher high. Once you make a higher high, you adjust your trend line right to the outside. Bang. Okay. So you got a sub fib, it's an 80-20. Okay, so all these Aussies kind of look the same. Okay, stops above the A. Can we get price to break and turn over, start making lower lows and lower highs? Or are we gonna push up? We're gonna break this level and continue to uptrend. We'll learn a lot about that tomorrow. So that's where we sit right now on this Aussie dollar setup. Here we are on the 1. See how it all plays out. See how it all plays out. So those are the Aussies, right? All sitting kind of in similar positions, okay, with their alignment. So let's see how it goes. All right. I want to take a look at this cat Swiss. Right? Have you been playing the cat Swiss? I missed it. This move.
So on the cat Swiss, I'm sitting in my long trade.
Oh, so you did get it. I completely missed
Yeah, I
this.
caught it off that low.
Man, good job. I was sleep at the wheel on this one, man. And it made a nice move, but you've been in it long because I didn't I don't know why I don't know why. It was because it went when it pushed below this level, I got out. But I know it came back up above that level, and I just never got back in on the trade on the
Yeah,
position. So
initially, because I was in on that first push down to that 65 951 level.
yeah,
And I got stopped out. But when we came back to it, I re-entered. So my entry on it was 66 595.
oh wow, oh you're
A little
going
bit
here for the
higher,
ride.
but
Yeah,
yeah.
yeah, 66 595. Wow, decent, real decent.
So it's working out.
Yeah, 66 595.
Yep.
Yeah, that's good. That's good. It's gonna probably push through that level too. It's a strong level for it though, right there.
Yeah, it is. I'm watching. I was
Yeah.
looking at
And
it because just trying to see do we get a pullback and have like a head and shoulders pattern right there,
I think it's gonna snap it
or
though.
potential crown. You think
Yeah.
so on that push? And
Yeah.
with the Swiss being weaker this week, we may.
Yeah, I
So
think
I got
so.
my stop moved up a little bit. So
I think so. Let's look at let's do something. Let's see. Let's see something. I haven't done this in a while. Yeah. Yeah. It's down. I noticed that when I was looking at the charts earlier that Swiss seems to be tailing off a little bit.
yeah, SmartTrader got this as a buy also on the strength meter.
Strength meter. I'm not sure if it's out. I don't know when I reset everything. I don't know if I'll put it back on. I did. I don't know. Back to my panel. Who
Them
knows?
resets are crazy.
No, I don't know. I had to put it back up on there. But yeah, I think that we'll see. It's knocking at the door again. That's a strong level there. So we'll see. But yeah, good job on that, man, getting back in because I sure enough missed it. It's sitting high on the 4, but that's a pretty good return. The sellers came in, but they gave a pretty good bounce. I still like it to the upside, even if it pulls back again. I think eventually that's going to continue to move higher. Unless we move
Yeah.
into some crazy risk off situation. Yep. Take a look at this cat yen. So no, it was continuing to push higher, right? So this 382 was a monster. That was a monster move, a great trade for us. Look at it, just continuing to push, right? So we're chasing that 105.84 level. See what happens if it gets there. That's still in that zone on the 4. Okay? So I can take this out. That was that TP one that it hit from the daily. But we'll see. Seems like it's trying to make it run to that level. All right, let's draw those trend lines and see what'll happen on that. If you're not in on that, it's pushing pretty high. If it'll move, so if it'll move, test that level and hold. When it comes down, we'll see. We shall see. So that's where we are on the CAD. So all of these setups are moving at fairly high prices. All right. Moving at fairly high prices. So continue to be patient. Take this out too. Clean these charts up. Continue to be patient. All right, that's the CAD. That's pretty high. That's sitting pretty high. I want to go through and take a look at this CAD, this Euro Aussie, right? So ladies and gentlemen, crown completed, and we've hit TP1, right? We've hit TP1 at 382 on that. Okay, so that was a huge move. I got stuck a couple times on this, right? Because I got greedy. I wanted to try to play the pullbacks and and take the ride down. But yeah, that was a big move, right? It made its way down. So through all the mess, right? We like to say we don't control how it's going to get there, right? We just trade our zone. So you can see how that crown played out. We didn't hit that D extension, price held daily and monthly resistance. And then it just took its time, right? But if you just take it out of the zone, right? Out of that 127 zone, we drew down. Look at this, everybody. 180 pips or so. It came all the way back down to the 382 to 693 pips. Huge. It's amazing. It's amazing. Does it take a lot of patience? Yes. Do these setups play out? Oftentimes they do. So that was a big one there. That was a big one. So that is the Euro Aussie. So we'll see what that wants to do next, whether it wants to pull back or continue down.
Benny,
We'll see. Yes, sir.
just a quick question on the daily fib. If you play the 80-20, do you play it to the 618 level or the 382 and just leave it from there?
380, you can play it to the 382. So when I was trained by my mentor, the safest move on the counter trend trade is all the way to the 382, always to the 382. Now, what you could do is when you get around that 382, right, you could take the majority of your position off, right? This is a huge move. And if you want to leave, right, some of that position on and see if you can catch it to a 61.8, because ultimately, if you want to buy the Euro Aussie, you would love for it to be at the 61.8 level, right? So you would hope that you can let it take the ride down to the 61.8 and then look to buy, right? If your idea is that, hey, I'm still bullish on the Euro at that point in time, but always safely back to the 382 is the ideal counter trend trading on that setup. It's a great question. Really good question.
Okay, thank you.
You're welcome. Because historically, the way I was taught is that the market likes to at least retrace back to a 382, when it comes to the fib. So that's why that 80-20 move, right? That correction could be a huge move. Especially, that's one of the first things he taught us is when you get for counter trend trade setups, when you get higher time frame D extensions hit, because that represents possible exhaustion and a reset. So like if you run your fib on a monthly, like if you see a trending market and you pop a fib on a monthly, you're like, man, it's just hit a D extension. That should alert you that, hey, there's possibility that there may be a large correction coming in the market. Same thing with the weekly on the daily chart, right? So if we just keep it on the daily chart, when we get that 80-20 zone that's hit on the daily chart, and we know the market likes to at least find a 382, depending on the pair, that could be anywhere from 250 to you see close to 700 pips back to that 382. So that could be a large move that takes a lot of time for that correction. Right? And then some people don't understand. Like people will be like, oh, they'll be on a lower time frame, 1 hour, 15 minutes. Like, where's the bottom? You know what I mean? Like I'm bullish on the zero overall. Like, where's the bottom? you have to look from the higher time frame. You know, it's like there's no end in sight. Like, what's going on? The bottom fall out of the euro, you know, but you know that is just a correction. It's just a maybe, it's the correction, right? So always safely back to the 382, right? Then get out completely and then wait for your low price to get long if it's a trending pair, you know. I know some people launch 2 orders, so they'll split an order in half. So say you were trading at $1 a pip, you split it into 50 cents, play at 80-20 zone, you launch 2 trades at the same time, but you got 1 trade going to the 382 and 1 trade that's gonna try to get to the 60. So it just depends. Easy way is just to reduce your trade. If you want to try to get it to that 61.8, just reduce your trade, secure the bag for the majority of it, and then let the other little bit run. Move your stop to break even or in profit for sure with a big move like this on that last part that you have running. So that way it's free money at that, right? The worst you can do is break even or get stopped out and have a stop profit. That's how I would manage that trade. Because you're thinking about it, right? The crown forms, and we know that the 5th part in our rule with the crown is 5, draw your trend line. Right. And the reason why that's the 5th rule in that crown is because as long as price stays below that trend line, it has the possibility of continuing to the downside. So, yep, that's that. All right, good deal. Euro NZD, let's take a look at it, see what it's doing. Right. EuroCAD, take a look at that real fast. Sorry about that. Let's get there. We can see, right, that it's following that same track, but it's moving slower. Okay. Struggling at some levels. Okay. But it still hasn't hit a 382 yet either. Look at the move. It's come a long way though, off that higher time frame 382. Now here it's moving down, but we were trying to catch to see if we can get that correction. I don't know. It's been pretty the Aussie and the Canadian dollar with those surprise rate hikes got kind of volatile quickly, gains some strength quickly. So I don't know if those pullbacks occur like they oftentimes do. But that main swing is still headed in the right direction. It's just a matter if it pulls back and continues, or if it just turns over like the Euro Aussie kept. But that's where we are. That's like that came right close to the extension than at Utah. So we'll see on that. But that's the long-term target there, right? So even on this move with the drawdown, right? With your drawdown, we what is that? Where are we at now? Over 500 pips, almost 600. Okay. Big daily fibs that were 80-20s. That's 852 out of that zone. If it hits that target, 852 pips. Now, some of you like your stops a little tighter. You want to trade with a little bit more size. That's fine too. What's important is that you can consistently identify the zones. How you enter that trade is completely up to you. Whether it's off a trend line, swing high at the zone, trend line break, that you have to kind of figure that out on your own and test it to see what you like, what the results are, one, what the strike rate is, and how you feel when you're taking that trade, right? With the tighter stop, right? So you can put here, you got that swing, the swing high here in the zone. You could put your stop, okay, right above that swing high. You would have gotten a break, but then look, right, depending on how tight you ran your trend lines, that's a nice move down now. That wasn't chump change, right? Over 300 pips to that level, right? So you had to manage your trade, but then it reversed and it took you out, right? And then the rest is, if you're paying attention to it, you still got an eyeball, you're drawing another trend line and you get another break, right? So that came into a double top. If you identify those, that was another good signal there, here, right? But we broke down again, depending on how you ran your trend lines, how aggressive, you could have got a break and then moved up again. So, you know, you have to get a good beat on how you feel with that trading style and that entry technique, right? Putting the stops right above the high and looking at your trend line breaks or whatnot, right? Or you trade small and you just let the trade just swing, right? You just let Just let your orders accumulate, and your positions accumulate. Right? So, a couple different ways of thinking about it. Everybody understand what I'm talking about there? Am I clear on that with the entries? Yes, no?
Yes.
Okay. All right. Because it could get, when you're looking at like aggressive trend line break swing highs and stuff like that, oftentimes you kind of have to be around or make sure you have your alert set up, but then it can get a little, because you never know when a market wants to get choppy. We don't know, right? We're trending, and then we got choppy. We move sideways. It's tough to make plays like that. So over time, even though there's times where I'm itching, like, boy, if I can get aggressive on that move, if I can wait for a trend line break and drop, 5 mini lots of standard or whatnot, if I can get the timing right, but boy, that could be a headache. That could lead to some rough days at the office, So, you have to give yourself some time to discover what you really like. What we try to get everybody to understand is the framework. If you can consistently find the zones to trade in the market, that's a lot of the battle. So that way, that can lead to you making consistent profits, right? But this part, you have to figure out. I just over time now, I don't want to be bothered with all. I just don't. With timing my trade and timing my setups, that can wear on you over time. Just my experience, right? Some people love it. Some people love it. Right? Not my thing. All right. So, Ryan, what do you think about that?
My apologies. I stepped away for a minute. Can you just give me a quick recap?
Oh, yeah. I was just saying about in regards to entry techniques, whether to let the trade small, let it swing, or to try to time your trend line breaks, putting your stops above swing highs and things like that once it comes into the zone.
Oh yeah, man. I'm all about when the trade gets into the zone, taking the trade, placing the stop, like those 80-20s, placing stop outside the D extension, letting it do its thing. Or in those deeper tracements, placing outside the A, and letting it do its thing. If it pulls back deeper, it pulls back deeper. I already calculated the risk. So the timing piece, I don't have the time to sit and try to time what the market is going to do, because it's going to move how it's going to move regardless. So I'm all about when it gets to the zone and it meets the criteria, pulling the trigger, man.
Yeah. And I agree. What was crazy is that I was told that in the very beginning, but boy, it's nothing like that. If I could tighten this up, I could flip this account.
That's how they sell you.
Yeah. I could flip this account. Now, if I could just find, then it became like, I know the zones consistently now. If I could just find the right indicator, to help me with the timing so I know exactly when to get in, And then it was like, well, if I could just find the right moving average crossover to pinpoint that now it's time to get, I've been through the whole thing.
Absolutely.
Yeah.
And the next thing you know, you're 2.5 years in, and you're like, where did time go, and what have I done? And all you've done is change. So if the automotive industry worked that way, we'd be still in the Flintstone age.
Yeah, buddy. So, but that's the reason why I know I'm so passionate about it, and you're so passionate about what we do, as teachers, because we've been through it. We've been through it. So, yep. So that's the Euro CAD. Take a look at this Euro NZD. So this one, right? Larger move here, right? So I got that sub fit running, but this is your main play here. See how it broke that trend line? Right off that entry. Now we're pulling back. So this didn't quite push up as high for that play, but it's pulling back now. So I want to see if we settle down and then look to add a position to get back long. I'm still holding that bullish narrative, but we'll see. We came off at 382 here, but we'll see if it eventually holds and wants to swing back. So we're getting into that zone of being oversold, right? Beautiful 80-20 play to that 382. Okay. Higher time frame 80-20s, everybody. Magnificent, right? So what is that? 866 pips or so. So this was a huge bullish move here. So what I'm hoping to see is, of course, the market likes to take back a percentage of that, right? So, hey, take back 61.8% of it is cool with me, right? To add to get long on that one. But I still have that bullish narrative for the euro right now, even though it's inflationary data that's cooling and the talk of recession and things like that, Eurozone. We'll see how long this rally can continue on commodities and with the stock market. We'll see. Maybe we'll find out something tomorrow. But that's where we are. So it's been a nice push up. Now it's correcting. So we'll see what happens with that over the long term on the Euro NZD. I want to take a look at this euro dollar trade because it has made the U-turn in the zone. And I'm hoping with the news tomorrow that this can continue to move up because it's looking pretty good right now on the long side. If I can get my fibs, I'll show you all. So look at this play back here. Huge correction. We all remember that now, right? In the not too distant past, right? Nice swing off that 80-20. Leads back to the 382, right? That was a good setup. So this is a prime example. If I can safely get back to my 382, maybe I just get out. But when I get to the low price, if my bias is still long, now I'm looking for that swing. And that's exactly what price has been doing, right? So you look at off this level, that's within the AB boundary, 154 at its highest point was 190. So almost 200 pips. So now let's see with the news tomorrow if it wants to continue. We shall see. Okay. But we pull back. So long term, right? Long term, do we get back? Right? Way up there, 112. Right? Maybe. Get this off now. So we'll run. Do we get back there? Maybe. We'll see. But right now, that's a beautiful U-turn in the zone. So we'll see if it can continue through this push zone after the news tomorrow. Never know. Never know. So that's the Euro USD. Any questions on that?
No.
All right. But you all can see it, right? So it came into the zone. Like, I'm not trying to time that. Right? My main concern is the zone. Right? And then you see how it just tailed off. Okay. Came back down. So Euro USD, CAD, Euro JPY. Just been decent little runner. Right? Just keeps moving. Hold on 1 second. So you can see, right, that 236 level, it just keeps bouncing and moving up. So this one's a funny one. That's nice price action though, but that's not me, right? That's not me. I don't have a double bottom there or double bottom at a 382 or anything like that. So, right, from the 4 hours, nothing. But here, see that right there, right? So on your 4, okay, right? You didn't get it here. Let's see here, look. Okay. Look at this. Okay. See that? It's amazing. right? So just little price action patterns over time that you start to discover to go through, right? Smaller wave, deeper push, right? 118, 127 zone, right? Hit the 118, came down to the 382, right? So look, off the daily level, 237, right? You see how we double bottom, right? That W, right? They tell you to look for when you're first starting out, right? See, yeah, right? Got that there. Look at, and now look at this one, right? How you get pairs to move similar. So if we go and we took a look at the GJ, right? Here, you showed up that odd on a 236, you showed up at a double bottom. See that? And look what it did. We pushed right into this 80-20 zone. Okay. So it's just price action, pattern recognition, right? Now, how you didn't get it on the last pair on the EJ, you didn't get it to play out right at the 236, but it found support and you got a double bottom. Then when you rolled down to the 1, it was sitting right at a 382 or whatnot. Okay. So just recognizing certain patterns. So once you get your basic trade plan down, then there's different caveats that you can add based on your experience in the market and things that you're able to recognize. Right. So that's a nice, look how that's pushed up. Right. So that's an 80-20. Yen is running. Right. So you could draw your trend lines and just see. Right. At some point, you're gonna get some relief. Right. Either in this zone, maybe at this daily resistance at 180, but at some point you're gonna get some relief and some profit taking and a nice move down. See, look. See that there? And it's hanging around. So we'll see what happens on this GJ. So I just wanted to show you all just the little subtleties in the market and being able to recognize your patterns, right? So look at your EJ. And where it occurred on the 4. Didn't occur here, a little higher. Okay, that's where that pattern took place. You zoom out, right? Say right up on that 382. Take off. So I wouldn't be surprised if that finds its way and just continues long to the extension. Yep. Any questions on that? And that little lesson there.
Yeah, Benny.
Yep.
Yeah, just sort of back on the question I asked earlier regarding the 80-20 to the 382, and I just want a bit of clarification. Does that apply to all time frames or just to the daily time frame?
All time frames.
Okay.
Yep.
Okay. Thank
All
you.
time frames. So if you spot them, like here, so we're on our 1, and you see this swing, right? So you had your drawdown, right? You take that out of the zone. You had your drawdown first, but then you came right there safely to that 382. Right? Boom. Because if you don't have on the counter trend, you don't have, like, unless you run your stop loss super tight, you won't have a monster risk to reward, but you will have pretty high strike rate, right? So that makes up for that. So for example, if I'm in this setup here, this 127, to that D extension is what, 130? To that 382 is 242. Right? So you still think of it in those terms. Now you're not getting a crazy 3-to-1, 4-to-1 like you would off of the 61.8 type of trend trade scenario, but it still puts you right in a positive risk to reward ratio on those setups, even if you leave that stop loss wide at the D extension. It's crazy how that plays out, right? It's just the math. You know, and once we discovered that, we were just like, man, like, let's just leave the stop loss. Why? I don't worry about timing it, because if our strike rate, you know, 60, 70, 80%, like, you're gonna make money, right? You're gonna make you're gonna make money if you play those consistent. And so that's why Ryan just pulled the trigger on the trade. It's in the zone, boom. Like, it is what it is. Over time, as the edge is gonna play out. And that's really what it's all about. You know, so we think safely back to the 2. So what is that? 130, 242, 130. That's less than a 2-to-1, but it's got to be close to a 2-to-1, like 1.9, 1.8, something like that. But then, hey, my strike rate on these are above 50%, right? So we call it the 80-20. So, you know, if I play them over time, even now, if you manage this trade deeper, then that's just icing on the cake at that point. You get what I'm saying?
Yes.
You know, like, I'm back to, you know, my 382, right? Boom. But then if I can pick up a little bit more on that trade with the remaining that I have left in the market, that's like 330, right? So same here, you know, so right, like here, you can see them here, you know, playing out. So here to this D extension, so back, right, 127 zone, back to that D extension. Wow, what is that? About 100 pips, a little over 100 pips. But to that 382 was 200. You see what I'm saying? So it doesn't matter like which fit, you can pick any fid, and that scenario is going to play out, right? Look, in the zone, and it doesn't have to be right on that, you know, on that 127. Anywhere in that zone, right, will put you in the range, right? So call it 90, back to that 382, 184. So you just see it playing out over and over and over again. You know, so safely back to that 382, right? So maybe you take 75% off the trade, let the last quarter run, try to get it to the 61.8. Because what could happen, right, at that point is if I'm letting that last quarter run and I get enough of them to get to that 61.8, then that starts to compensate for my losses, right? That starts to cut into my losses, you know, in regards to what I lose. You know, it's like I'm picking up that little bit of extra that helps build me a little cushion, something. So, yeah, it's a great question that you asked about that whole scenario. But yep, that's the way it's taught. Always back to at least the 380, back to at least to the 380. So, you know, even here, right, off your 118, right? So you may not be, because that's sitting low, but hey, I've got daily resistance there, right? I start to pay attention to all of those things. So maybe I tighten it down, right, at that point. So that's 187. You got 232. So that's still, right, it still puts you positive, but you may say, hey, that just ran and formed a high at resistance. Maybe I'll bring that stop down a little bit from that D extension to increase that risk to reward if you want. So, you know, some things you just have to just think your way through it. You know, all the situations aren't the same. So, but you can see how that math just plays out. Just like if I'm rolling with the trend, I got a 61.8, 215 pip stop. If it goes to the D extension, 467. That's never going to change those ratios. Why? Because the AB boundary is concrete. The only thing that floats is my C and my D, right? My D is relative to my C, and where it forms that low within the AB boundary. So that's why we love teaching the fibs, just fundamentally, because it's a part of like our foundation and not advanced. Because it's like for a new trader, man, if I could just do my top down, get my fibs on my chart, and I understand where my sweet spots are in regards to our, our philosophy with the fib, then if I use proper risk management and I work on my psychology to hold my positions, I can really compress time frames and shorten my learning curve. I can really get this thing and start to see some results a lot sooner than later if I stay disciplined to it. Right. So yeah. So that's that. I want to take a look at, there's actually a lot I want to take a look. We're not going to get to, but get it covered in the morning with my man, Mr. Ryan Carthage. This pound Aussie. Right, is trying to. Okay. So we got that wicked move off of that. Boy, off of that 127, but it's up against daily and monthly support. I mean resistance as well. But you can see it's kind of stabilizing into the zone. So even if you come down here, so anyway, I lost my chart, but it's kind of stabilizing a little bit. So this one's gonna be interesting to see if it wants to take off or if it's gonna push a little bit lower and stay within the AB boundary and eventually reverse. But just want everybody to keep an eye on that. As that momentum has slowed a bit. It's slowed a bit, and we know that the pound also benefits from the stock market rally. So that's one to keep your eyes on. We did the CAD. Last one we'll show everybody, because I know Ryan had posted this in a while back in the Discord. This NZD Swissy. So we'll wrap it up on this one, because we come right into that TP one off that swing. Right. Awesome work, Ryan. Appreciate that one. That's where we are. Yep. So that's where we are. So we had noted it watching the 4 hour stochastic, right? We had noted that doing one of our rituals. Watch that 4 hour stochastic, because it wasn't back in the buy zone yet. Right? Everything else is lining up. But as soon as it twisted right back in that buy zone, right, that trade took off and made its move. Right? It made its move. Got the momentum that we needed to push longer, and off that 1 hour, it swung right into the zone. So with that Swissy, when you look at it from a higher time frame, it's broken back above this 55.46. So while we look at this, you may be looking at just a full-on reversal. Okay. So think about that. That's found support. So while it looks like it's run a mile already on our lower time frames, this move is really just getting going on a higher time frame if it wants to continue long, right? Think about that. Okay. So we may continue to see some pullbacks and some continuations, and eventually, right, maybe this A gets taken out. We keep rolling. But I love the 80-20s because it gets you in at really, really good low prices, right, to the downside, and really good high prices to the upside. So that's it, everybody, right? So just continue to monitor these setups. A lot of good ones out there. These Aussie pairs, I'm interested to see how they play out, since they're all kind of lining up, right? So that could be a great thing, or that could be doomed sometimes if you get caught in all of them, right? So use the additional confirmation on those Aussie scenarios. Ryan, anything before we close out?
No, sir. You said it, man. Continue to be patient. Continue to be patient. Continue to wait for your confirmations to come in, and when they do, pull a trigger.
That's it. That's all we can do. That's all we can do. Can't control the world. Joey's still holding at 54.99. Joey's not playing. She's on with those entries. Well, that's it. That's all I've got for the night, everybody. We'll see you tomorrow morning, 6:30 a.m. Eastern Standard Time, with my awesome partner, Mr. Ryan Carthage. Good night.
Thank you. Good night.
Thank you so much.
Thank you.
You're welcome.